And so our name is West Red Lake Gold Mines. I make lots of forward-looking statements. There's a lot to say about West Red Lake Gold because there is a huge amount going on with the company. The short version of that is that we are right on the edge of producing gold. The Madsen Gold Mine will ramp up gold production in the second half of this year. And so it's right around the corner. There are very few projects out there, new gold mines that are starting production in 2025 in this incredible gold market. So that's certainly my first key point. Pardon me. The mine is built, it is permitted, so those risks have already been managed. Pardon me. There is a mine plan that we put out at the beginning of this year, and that mine plan is very conservative. It uses some very conservative gold prices in how it's built, but even with those conservative gold prices, it shows strong free cash flows from restarting this mine. And that's before we include, we consider a bunch of the upside opportunity that also exists at Madsen from deposits that we know that aren't included and from different ways of being able to mine the deposit as it is based on the gold price being much, much stronger than that mine plan assumed. We have the money that we need to get this mine into operation. We signed a $35 million US debt facility at the beginning of the year. And we added a $20 million Canadian financing just last month. And so we're doing it. We're ready to rock. That money enables this plan. And so this plan has the startup schedule, Q1, Q2, and the second half of this year, what we're doing in those times, and what the funding considerations are as we go through that process. So in Q1, we're right near the end of that, complete mining the bulk sample. The bulk sample is really the first 10,000 tons of the tons that we will mine at the Madsen mine. It's done in a very regimented way with people watching, because a key part of what we're doing right now is demonstrating to everyone that we can mine this deposit. And that matters because this deposit stumbled under a previous company. A previous company spent a lot of money drilling the deposit, engineering, permitting, building a new mill, getting access to the deposit, putting this thing into production. But they cut some corners in how they approached mining, and those corners were important. And unfortunately, it meant that they went bankrupt after only 14 months of commercial operation. And that was only 2.5 years ago. Their bankruptcy, very, very sad for their shareholders, certainly, but it ended up being West Red Lake Gold's opportunity because we were able to buy an asset into which hundreds of millions of dollars had recently been put. And we bought it for $6.5 million cash plus some stock and a 1% royalty. And we have since addressed those corners that they cut, and we're ready to bring this mine back into production. Because it stumbled not long ago, we need to show the market that we will not fail the way that the previous company did. We have approached this opportunity differently. We've done the work that needed to be done to mine this deposit successfully. And that is what we are about to demonstrate. That bulk sample is going through our restarted mill right now. And so at the beginning of, in April, the beginning of the next quarter, we will report the results from that bulk sample. And those are really important. As we're doing that, we'll build up our stockpiles, we'll continue to develop underground, putting ourselves in the position to be able to ramp up this mine in the second half of the year. And you can see the funding considerations on the other side of the table here, money that we have on hand, money still available from the debt facility, and the fact that we will start producing gold. In fact, from processing the bulk sample, we are producing gold right now. I went through this timeline a bit just then, just a moment ago. This is a mine that produced 2 million ounces in the 40s, 50s, and 60s. It did very well. Then it was shut down because the price of gold went low and the mine had gotten deep and it didn't make sense anymore. A few other companies came and took short attempts at this mine in the intervening years. And then we got to the last company that was here, the company called Pure Gold, the $350 million that they invested, the fact that that didn't work, and that enabled us to come in. Now, I will point out that the Madsen project is the lower red land package on the map. We also have the upper red land package there, which is called Rowan. The previous company did not have Rowan. Rowan has a very nice, roughly 300,000 ounce deposit on it that's very high grade and near surface. So that's an additional opportunity that we can add to the Madsen mine going forward. This is a look at what the deposit is. The dark black sort of squiggly lines are the modern underground development from that prior operator and from us. That's the access that we have into this deposit. The lighter colored lines, all of them straight, that's all the historic development from the 40s, 50s, and 60s, including you'll see a shaft that goes all the way down to 1,300 meters depth, because they did some incredible exploration drilling back then, and they discovered that zone down there that you can see still in pink. That's what's left of it. That's called the 8 zone, which is a particularly high grade part of the deposit. High grade enough that those old timers did all of the work to drive that shaft so that they could mine part of it. So that's the lay of the land for the Madsen deposit. Okay, I said that a prior company stumbled and that we are doing things differently. This is the summary of what we are doing differently. So really key amongst that is that the last operator did not understand accurately enough where the gold was. So they weren't able to specifically mine the right rocks. The way to do that is to follow the rules that have worked in Red Lake for the last 100 years. Red Lake, the district as a whole, has produced 100 million, no, sorry, I said 100 million, has produced 30 million ounces of gold over the last 100 years. And those 30 million ounces of gold were mined successfully from deposits just like Madsen. The way that that happened is that they really did the work before doing the mining. And the work is hammer the deposit with drill holes so you really know where the gold is. The last operator mined this deposit based on a resource model that had drill hole that was informed by drilling where the holes were still about 20 meters apart. The rule of thumb in the district of Red Lake is that your drill holes need to be no more than about 7 meters apart. And so that's a big chunk of the work that we have been doing since we acquired this project about 20 months ago, is a bunch of drilling into the known deposit, tightening up that drill hole spacing from 20 meters down to 7 meters so that we create a really accurate model of where the gold is so that we can mine the right rocks. That's been fundamental in our approach. Then once you have that very accurate model of where the gold is, you make sure you have an engineering team that is ahead of the game, proactively engineering so you always have 15 months of mine plan laid out ahead of you, and you're planning that with efficiency and optionality in place. I mentioned the test mining process, so I called it bulk sample before. They are one and the same. Bulk sample is what we're getting out of our test mining process. Test mining is the first step in mining. We have gotten underground. We are training our crews to operate safely, to mine the right rocks accurately, and then once those things are accomplished, to do it with increasing efficiency so they can move the rock also quickly. We're also learning while we're under there how close we can get to old mining areas, what mining methods work best in each of those kinds of areas. It's been a really, really useful exercise, and it has left us very prepared for mining this deposit at full speed, which is what we're coming up to very shortly. The other big component of our approach here has been doing some projects, infrastructure projects, that the last company didn't do. The last company tried to build the mine on as small a budget as they could. That means that there were quite a few projects that would have made the mine more efficient that they did not do. because they didn't want to spend the money. That meant two things. First, they were not able to move rock efficiently. And secondly, they pushed costs that usually would be construction into operating. They leased a lot of things, for example. You put together inefficiency and pushing costs into operating, and you end up with a very high cost mine. And so if you want a mine to fail, the two ways to do it are to not deliver enough gold to the mill and for it to cost a lot to move that rock on the way. And that's what the prior operator did, both of those things. An insufficient resource model means that they did not deliver the gold grade that they needed to the mill, and it cost them a lot to do it. Through our definition drill program, we absolutely expect that when we say this mining area grades 6.7 grams per ton, this mining area grades 5.6, this mining area grades 9.8, we expect to be able to deliver those grades to the mill. That's the reason that we're doing the drill program. And we're doing the capital projects so that as we move that rock to the mill, that rock movement is happening at the right cost. So we've done a big connection drift, which connects the two sides of the underground mine so that we can move rock efficiently. Think of it as like an underground highway. We've done a tailings dam lift. We installed a primary crusher that was missing. We built a camp so that we could attract good workers to come and work for us at the Madsen mine. These are all things that we've done to make sure that we can operate efficiently. I'll just touch on this slide. Mining is complicated, mines are complicated. And so what's really important is to ensure you are actually ready to operate all the components of a complicated machine. That's what operational readiness is. And these are some of the key components of operational readiness for the Madsen mine. We've really been pushing our crews to mine faster. And that's the chart on top here. Average development. So number of meters of, think of it as new tunnels underground that they've been making per day. And you can see month over month, that rate keeps rising. That's important. We need to drive the tunnels so that we get access to the areas so that we can mine them. Making sure that we're mining with good accuracy, certainly important, been a huge component of our test mining process. Restarting the mill smoothly, making sure we have stockpiles, making sure you have a very strong safety culture. All of these are part of making sure that we have the best odds of a smooth ramp up in the second half of the year. I mentioned that we had completed a pre-feasibility study. That's our mine plan. The numbers in that underline the rationale, the reason to restart this mine. Please note that these numbers, these dollar numbers are based on a long-term gold price of $2,200. And even just at a $2,200 long-term gold price, this project carries a $315 million NPV and generates $70 million in free cash flow annually over its 6 years of operations. So that's the summary of the pre-feasibility study. Now we expect to actually produce more ounces and run for longer than that mine plan captured. And the reason for that is the other gold price that went into that pre-feasibility study. Two gold prices drove those results. One of them is the gold price that you put in the financial model. The other one is the gold price that you apply to the resource, the deposit, to see if it makes sense to mine it. And when they applied the gold price that they applied to just see if it made sense to mine the different parts of the resource, that was a very conservative gold price of $1,680. And so that means that a very significant part of our resource was left out of the mine plan based on that conservative number. Now, this is a bit of a complicated slide. What it shows is that as you use a higher gold price to decide which parts of the resource might make sense to mine, guess what? A whole bunch more of the resource comes into contention. It becomes possibly part of the mine plan. And that And it's a sea change. I mean, we can almost double the potentially economic tons by using a $2,400 gold price in our test of what parts of the resource make sense. That's the takeaway here. And it really matters because we should be able to mine bigger for longer at lower cost based on this math. That's a long conversation. If anybody has more questions about that, I'm happy to take them either after this in the Q&A or along the side afterwards. Quickly, I'll just go through the fact that the Madsen mine deposit, as it's defined, that's what the mine plan is based on. We have good opportunity to extend some of the targets right within that deposit. The picture on the right here shows some of the areas that we're targeting this year with our resource extension drilling. Most of our drilling, 70% of our drilling, is still going into tightening that drill hole spacing, but 30% of it is going into extending zones where we know that there's opportunity to find more tons, find more ounces, testing areas that weren't tested before. And so this is some of the work that we're doing for that. And we're really optimistic. We're already seeing that we can extend zones, that we can find new zones right in and around the known deposit. And then there's good opportunity in the very near term to pull 2 additional deposits into the mine plan. One of them on the right here is the Fork deposit. That's 250 meters away from the Madsen deposit. We just need to, we've defined a high grade core to that deposit that previously was always considered a low grade body. And so we are really pushing it to see if we can pull that into the mine plan. And then that Rowan project that I described earlier, it's only about 30 kilometers away as the crow flies, and we're pushing to see if we can incorporate that into the mine plan over the coming years as well. It would be fantastic. The average indicated grade of the deposit at Rowan is 12.8 grams. That compares to a 7.4 gram per ton average at the Madsen deposit. So it would be a high-grade sweetener to this mine. I'll really wrap up here. The value of production, if we use a $2,600 gold price, still way below current pricing, as we know, but a $2,600 long-term gold price, the NPV, the value of the Madsen mine, goes to almost $500 million. And so that really matters because development stage companies are usually rated at something like 0.4 the value of their asset. Producing companies are usually between 0.7 and 1 times the value of their asset. That's the kind of opportunity that is ahead for investors as we demonstrate that we can mine Madsen successfully.
Gwen, excuse me, Gwen, you may try to wrap up this soon because there's some other questions we want to address from the audience.
Absolutely. I don't need to talk about the gold market. I can wrap up right there. So this is our team, and I can leave it. This is our share structure. That's the number of outstanding. Our issued and outstanding is about 350 million shares. And I've talked about the cash consideration. We do have a lot of warrants that trade in the market for anyone who's interested in that as an opportunity. All right, I will end it there. And
thank you. So there's a few questions here. I'll start with Larry here. He's asking, see, how large of an area of the deposit is with the 7 meters drilling space, and how is the average depth of it?
Right. So that's a good question. We have defined of the deposit, we have for the next 18 months of operation, we have completed the definition drilling into the tons that we'll mine in the first 1.5 years of operation. And so that's just an ongoing process. Every narrow vein, high grade underground gold mine in the world, silver mine as well, is like that. You're constantly doing the definition drilling ahead of mining. So we're on track to have that all set up as needed for initial operations. Depth, we do all of our drilling from underground. So the holes often are only 50 meters, sometimes 150 meters, but we do the drilling from underground.
Great. Another question. A couple of persons asking similar questions. He's asking, we start Madsen mine soon, but any potential risk still left to start the commercial production before you do that?
For sure. Every gold mine has potential risks. I think the biggest risk right now. The market is still wondering whether we will do the thing that I've said many times in this presentation that we will do, which is deliver the right grade to the mill. I think the results of this bulk sample work, those results should be out in about a month. I think that's going to be really important in the market. There's a lot of people waiting to see that we can do that. So that is certainly perceived as the biggest risk right now. And we're in the process of trying to address that risk very clearly.
And this question from Elias is asking, how much in total have you invested into Madsen, and when will it be all paid back?
Yeah, so we've invested about $140 million into the Madsen mine. The majority of that we raised in equity, and so that is not something that needs to be paid back. Debt-wise, the debt on the asset is we have the $35 million debt facility, of which we have not drawn the entirety. There remains 12 million undrawn on that facility. And there's also a series of gold-linked notes that represent about US $20 million face value. So those are the two debts that are on the project. So for a project starting production, it's actually a very small debt burden.
Okay, so one last question for you here, because running out of time. You will generate some cash flows when you start production. So how are you going to use those cash flow?
Yeah, so certainly paying off those debts initially is there's a debt repayment schedule for those, so certainly addressing those. And then bigger picture, we didn't start West Red Lake Gold to only operate the Madsen mine. We started West Red Lake Gold to give investors exposure to the developer to producer re-rate, or more generally, to the ability of an experienced operational team unlocking value at small or underperforming assets and turning them into bigger mines. And so we're out there looking to see how we can grow West Red Lake into a mid-tier mining company. That is absolutely happening alongside.
Great, Gwen. Thank you for your time and addressing all the questions. We're running out of time, but I'll do connect with you for some of the potential parties interested in following up with you as well.
Please do. I love to answer the questions. Thanks so much for your time and attention, everyone, today. Gilbert, lovely to see you.